Welcome, everybody, to the Scale Up Show. This is your host, Ryan Staley, and I have a very special guest with me today. I have Harpi Singh. Harpi is a partner at Innovation Endeavors. I'm going to explain a little bit about his background. So check this out. He met his founding team at Stanford, ideated for about 6 months, created a startup, sold it about 6.5 years later, then decided he wasn't done yet, built another startup, then sold that, became a Stanford professor, which he still is, specifically on startup creation, and then joined Eric Schmidt, who's the former CEO of Google's, one of his funds called Innovation Endeavors. And he's a partner there, and they invest in emerging tech and tools for builders. They've done seed rounds for organizations like SoFi as well as Panther. And then on top of it, they also funded Uber Series B. Harpi, welcome. Happy to have you on the show, man.
Ryan, it's a pleasure to be here.
Yeah. I mean, with that background, we're going to pull on all sorts of things to extract all that knowledge from your brain within 25 minutes, because your intro was so long, but there's a lot of stuff I wanted to highlight there. So why don't I not do you any injustice? I would love to hear just like real quick background on you yourself, what you're doing at Innovation Endeavors and what you're focused on. And then we'll kind of take it from there, since you're more on the investor side.
Yeah, absolutely. Let's dive into it. So I grew up in India, came here for a PhD, got a master's and decided that was it. And then I was a software engineer for 4 years. And then I was a founder for about 18 years. So like you said, I met my co-founders while I was in grad school at Stanford, wanted to start a company, and had an idea that we were working on. And 3 weeks before we graduated, we realized that we were too late to the market. So we killed the idea, but we liked the team. So we became this team before an idea, and we committed to each other for 6 months and looked in different spaces, came up with multiple ideas. And our first company was in the wireless infrastructure space. We built it over 6-7 years, as you said. And after that was acquired, we all took some time off, and then the same founding team came back together. And we started another company, this time in data analytics. And after that was acquired, I spent some time teaching at Stanford, and I joined Innovation Endeavors. IE, or Innovation Endeavors, we are an early stage fund. We typically invest in seed and Series A founders. So we like to get involved with companies that are maybe pre-product market fit. Most haven't figured out go to market. And we invest in emerging tech applied to big physical world problems, and we invest in enterprise infrastructure. So, we're looking for opportunities where there is the ability to apply compute and data to rapidly iterate through innovation cycles and really bring sort of tremendous speed to the market. So this is what we call super evolution, and we have invested in a lot of companies in supply chain, logistics, transportation, climate, life sciences, as well as on the enterprise infra side in cybersecurity, machine learning, data infrastructure, dev tooling, and areas like that.
Okay, wow. So there's a lot to unpack there. So let's talk about super evolution, because I've never heard anybody exactly phrase it that way before. Can you go a little bit deeper on exactly what that means, and then how to execute it in the real world for real world problems, right? We'd love to just hear some examples.
Yeah, absolutely. So I think if you just look around, things are done the same way as they were done maybe decades ago in, how your food gets to you or how things are transported and so on. And our thesis is that with new data and compute, you are able to come up with automation, you're able to come up with decision making. That's much faster. So we're looking for opportunities that allow you to iterate through these innovation cycles at 1000x the velocity with maybe 1000 the cost. So if you look at areas like genomics, if you look at what has happened in cloud and the explosion in data and so on, I think there is so much data, and there is all this compute available both in the cloud and in the edge, that the founders are able to run fast experiments. And instead of people wearing coats running experiments, you can have machines running these experiments quickly, and you can run many experiments in parallel. So we are funding a number of entrepreneurs who are able to go through this discovery cycle quickly, and that's what we call super evolution, where you can design products at much higher velocity at a much lower cost.
Okay, love that, right? And I'd imagine that it's even gotten more accelerated with the democratization of AI, over the last almost 12 months now, but probably less than that. Probably 10 months. It feels like 12 years.
Yeah, it
So
was January.
yeah. So walk us through that. And I want to make sure I heard you right. Did you say 1,000x the speed at what? A tenth of the cost? Something like that? Were those your ratios?
Or even a thousandth of the cost. If you look at what it costs us to, sequence now,
Yeah.
or if you look at what compute costs you versus, 10 years ago, the costs are rapidly falling. So I think to do the same unit of work, you can do it much faster at a much lower cost.
Okay.
And
So
the data that you can tap into, both the data that you generate internally by using sensors and so on, and the public data sets you can use, there's so much more that you can sit on that becomes the basis and becomes inputs for your experiments.
Okay, so let's go through a real world scenario, because I'm sure you've seen this, especially since you invest in product market fit companies and C companies. So and I know you taught the course on this, right, at Stanford.
Mm-hmm.
So if you were creating a startup today, right, like literally today, we're recording
Mm-hmm.
this
Mm-hmm.
August 30th of 2023. You're starting this today.
Mm-hmm.
Everything that happened, how would you approach it? Everything from, and I know this is a loaded question, so we don't have to go super
Yeah.
deep unless
Yeah.
we start nerd out. But yeah, how would you create that today? What would you focus on, and how would you build it from the ground up to have that rapid innovation kind of path at a reduced cost, like a ridiculous reduced cost? How would you create it? How would you run it? Go.
Yeah. So, I mean, if you sort of boil it down, the fundamental advantage that startups have over large companies is the speed of iteration, right?
Yeah.
If you can iterate and evolve, 30 times a week versus once every 3 months, you're just on a very different slope. So
Right.
that's what we are looking for in founders that we invest in, and that's what we try to do in my own startup. How can this smart group of founders run experiments very quickly and iterate and basically out execute everybody else?
Yep. Okay. So, and let me ask you this: do you think it's 100% requirement, like hard requirement for investments you make, to have multiple co-founders, or have you ever invested in anybody that there's just a single founder?
We've invested in plenty of single founders, but having done a couple of startups myself, I think almost every solo founder I talk to, they'll always tell you that they wish they had a co-founder.
It's true. Well, and then even if you look at the stats from Y Combinator, I think they looked at all the unicorns, right? And I think the highest percentage was, I think the sweet spot was 2 founders or maybe 3 founders. Right in there was kind of the sweet spot of the highest level of success. So, so that makes a lot of sense.
No, it's definitely quite a ride. So it's good to have kind of soulmates along for the journey.
It's true. It's true. It's a hell of a ride. So let's keep moving forward with it. So build this out. So what's the 3 to 5 step framework you would leverage based on your experience and how you invest in companies for building the company out, right? You have the advantage of accelerated speed and 3x the innovation of a bigger company. How would you deploy that? What would be, kind of strategy and tactics you would leverage to execute that?
So I think you can boil it down to a couple of things that ultimately every startup needs to achieve. And I think keeping your burn low and testing for product market fit is what it is all about in early stages. And once you figured out that you built a product that users want, it's about, okay, can I scale my go-to-market motion in a cheap, effective manner versus just throwing money at it? I think if you get those 2 things right, you build a product that customers love. And sorry, I'm in a conference room here. Okay.
I think it was awesome that you were talking about how you keep your burn rate low and your costs low, and then the electricity goes out.
Totally.
I think that's great timing. So, anyways, for those of you listening, that's what happened. Harpi's in a guest office somewhere. I'm not going to say where it is unless he wants to. And he's chilling, he's rocking, and all of a sudden the lights just go dark. So
yeah, I'm at a large company in Seattle, so we'll leave it at that.
it narrows it down to a couple. So, anyways, keep going, man.
Yeah. So coming back to what I was saying, so I think you're basically in a race against time on product market fit, on go to market, and you want to do that as quickly as possible with the lowest amount of dollars.
Right.
And I think it's not an easy job. I mean, it's easy to kind of summarize it like that, but it's not an easy job. Many startups don't do that. And I think if you can zoom into the right KPIs for you that tell you that give you an indication of product market fit and sort of measure what really whether you're adding value to your customers, and then you can sort of put afterburners on it from go to market. I think that's those are the two things that need to come together.
Yeah, I think I agree with you. I think that makes sense. And so, what are the 3 KPIs you would look for product market fit? And then, what are the 3 KPIs you look for go to market? I'm just seeing if it mirrors what I've heard other people talk about.
I think, I mean, at qualitative level, what you're trying to really answer is, have I built something valuable for the market? Is it a must-have versus a nice-to-have? That's number one. Second is, can I take it to the market in a cost-effective manner? So I think those are the 2 sort of qualitative things you're trying to answer. And then depending on the business, I think the KPIs usually include, ARR, and depending on what stage you're investing in, ARR is a good indicator of validation, the growth rate, how fast you're growing, churn, and whether you're seeing low churn or high churn. And we also look for, and again, this may depend from business to business. I mean, these are financial metrics, but we're also looking for how to measure the value that your customer is getting out of it. Whether it's ROI, whether it's speed to detection for a cybersecurity company, or whether it's certain automation metrics for a robotics company. So financial metrics, business metrics, and then on the go-to-market side, you're usually looking for some kind of a sales efficiency metric. So that could be burn multiple, magic number, things like that. But for early stage companies, it's really 3 to 5 metrics, if that you're trying to that matter.
Yep, totally agree. I think it makes a lot of sense. So that's a good breakdown. Very simplistic way to look at it. I appreciate that approach. So with obviously it's within the company name that you're in, Innovation Endeavors. Like, let's talk about the elephant in the room. With the speed of acceleration of AI over the last 10 months, what are you like? I guess, like, what's your take on it in terms of how it's affecting the overall startup scene and the history that you've had in it? Like, how is it different today versus yesterday or a year ago with like table stakes, execution, everything? Would love to just hear your take on that.
I think I think first of all, it's huge. I think it's going to impact everything. It's kind of like, people used to ask, are you a cloud company? Are you not a cloud company? And now everybody's a cloud company. And I think many founders started with, okay, how do I incorporate Gen AI into what I do? To, many founders are looking at, okay, how do I fundamentally change how things are done using Gen AI capabilities? So my point is, I think it's going to perpetuate through current companies and current products, and it's going to enable many new. It's going to enable people to rethink how they do things, and I think it's going to enable people to build new vertical AI apps. It's going to enable people to build new apps for cybersecurity, for automation, for climate, and so on. So I think it's all pervasive. It's like, I think, a super exciting time to be doing this.
Yeah, I think it's exciting too, just with everything that's possible. What do you see as the downside or dangers to how fast things are happening?
I think 2 things. One is, again, it goes back to, I think the toolkit that's available to innovators just got like 10x better. And I think if you're a large company, people are trying to figure out, okay, what does this mean for privacy? What does this mean for data sets that I can use, and so on. So I think startups are going to be able to just move much faster because they can take more risks. So I think the incumbents will have to figure out, what risks they can take, and I think they can get out innovated. So that's one. I think secondly, I think we're still trying to figure out things like hallucination. We're trying to figure out what data sets are going into these models, and I think people are figuring out fundamental things like copyright and who gets credit for what is created and things like that. But I'm all for speed, and I think we're going to probably break a couple of things on the way, and we'll figure it out.
Like, what spaces do you see based on like your macro view that are most ripe for disruption, specifically with AI?
I think first of all, anything that's text-based automation, I think LLMs are just tremendously good at. So that includes a lot of financial services. That includes, professions like legal and compliance and so on. So anything, or even, enterprise use cases, search and sales and gleaning insights out of just massive repositories of, whether it's sales calls or customer support calls, and figuring out, okay, what's working in the product, what's not working in the product. So anything that's text-based, I think it's up for grabs. I think if you're a creator, it could be video, you could be like a graphic designer and so on. I think this is going to have a tremendous impact. I think that's sort of available in the short time frame. I think even in things like robotics and autonomous driving and so on, it's enabling founders to do things much faster, because now they can use these models to do parts of stack that they were doing before. So I think this cuts across a big cross section. But if you're especially a text-based kind of an application, anything classification, taxonomy, I think that's very ripe for disruption right now.
Yeah, I agree. I think I'm seeing a lot of that. Like, even with you're talking about like video and graphics, let's take an example. That's not like a core competency of mine. And one of the things that happened was, once I started using it, I had capabilities that I didn't have the skill sets before, right? And not just like capabilities, like I could do it really, really well within minutes of something that I couldn't, that would have taken me days, right? And I didn't even have it. So that was something that was eye-opening for me on the graphics and video side. If you look at, that's graphics. Now let's look at video. So video, one of the interesting things that is happening now with like Runway ML, which I'm sure you're probably familiar with them, and there's others. They're starting to be able to create videos that in products, I should say, when I say products, like short movies, that because of the angle changes and everything would take like 60 different people to touch it, and one person can create that now. So like there's changes like that's happening. What I'm curious on your take is like, what I've seen most startup founders, from what I've talked to, and I mentioned this before the show, talking to a couple hundred over the last 18 months, right? And so one of the things that's really, really interesting to me is, especially recently, I've talked to a lot of them, and not very many are implementing it in a strategic manner for their people. They're all focused on the product side first. Are you seeing anything different? Are you seeing any organizations really, really focus on AI enablement across their organization at all, or no?
I think people are definitely using AI to give superpowers to their people. So I'll give you an example. So we hosted a supply chain event last night here in Seattle, and one of the speakers talked about how they are able to now take in vast amounts of data from disparate sources, from retail stores, from online, this and that, put it in a data lake, and enable people to ask questions about, hey, is my product going to be out of stock at the following retailers? Or show me all the retailers where my product may be out of stock based on velocity and this and that. And highlight that, show it to the retailer, and automatically send them an email saying, hey, we would like to restock your shelves on a Wednesday versus a Monday. And I mean, this is an internal use case. And look at sort of how many steps got taken out. And the retailer is happy, the manufacturer is happy, and it's a great example of sort of an internal AI productivity use case. So obviously, I think people are trying to enhance the products that they sell first. So there's a lot of focus on, okay, how do I make my product, 2x, 10x better by incorporating these new capabilities. But I think we're seeing more and more examples of internal use cases now.
Okay, that's great. I mean, that's a great example. And so with that, how were they doing that? Did they enable agents, or were they using how did they make that example happen, like on the back end?
So we didn't talk about their exact architecture, but my understanding is they created a large data lake
Mm-hmm.
where they consumed all this data and they put a conversational agent on top of it,
Okay.
where you could query the data and say, hey, show me this, show me that, and it would generate all these exceptions, and then they could close the loop by saying, okay, I'm gonna send an email or place a call on your behalf to do XYZ. And that could have taken like days or weeks, or maybe it wasn't even possible because how siloed the data was and how difficult it was to kind of organize it, structure it, query it.
Love them. Yeah. Any other great use cases that you've seen kind of similar to that you're hearing about that's blowing your mind or that you're just really impressed with?
Internal use cases?
Yeah, internal use cases.
We're seeing use cases around making sense of your product feedback. So, I think most companies would agree that there is delayed flow of information from customer support to product to engineering. And we are seeing use cases where instead of customer support synthesizing this information and conveying it to product, conveying it to engineering, product managers are able to now go in and query all these customer support calls and say, okay, show me about the top 3 complaints in the last 1 week. So I think that shortens the latency, or that shortens the feedback loops between these companies.
Definitely.
So I think the feedback from the customer to the product, I think that's happening much faster. So we are seeing companies do that. We're seeing some of our companies do that.
Love that. Yeah, I mean, that's highly useful. So it's almost the same thing, right? They're basically taking a data lake or putting all the information in a data lake and then leveraging a chat bot on top of it, an internal chat bot, and then extracting the information in effectively real time, right? So they could look up the queries, quantity, all that kind of stuff, right?
Yeah, I mean, again, the second use case is all sort of text-based. So like super easy to kind of put together and automate, but very valuable.
Yeah, highly valuable.
And I mean, that was hard to do like 18 months ago.
Well, that brings us to my next point. I had no basically push to talk about this today or interest, but like as of what was it? Yesterday, ChatGPT or OpenAI released their enterprise version, right? And then as of today, you see Google releasing everything with their Duet and their Copilot from Palm 2, I believe. So what's your take on those two models? And would just love to get your take. Basically, those business cases are almost like exactly aligned with what the value prop I think is for the enterprise option for both those models. So what's your take on those two events happening, and then what's the effect you think it's going to have on the marketplace?
Look, I think Microsoft announced their enterprise product. I think maybe it was just 2 weeks ago, and then OpenAI followed 2 weeks later. So they're like competing, collaborating. I think there's a lot of gaps right now, and we see a number of startups that are coming in with Gen AI for enterprise, and they are sort of solving this and that. So I think if you look at a traditional organization like a Procter and Gamble or whatever, they have to think about privacy, they have to think about the right use cases, they have to think about who's going to build it, and so on. So I think this is like building sort of the developers' workbench, and enterprises have very different needs. So I think I'm very happy that these products have come out, but it's going to take probably a couple of years for all this to mature.
Really? Yeah. Where do you think the biggest gaps are now then? And I think I know that you're going to answer, but I want to ask anyways because I have my opinion on it, but would love to hear yours.
Yeah, I mean, if you're an enterprise, you need something end to end, right? Ideally, or you're patching together a number of tools. So it starts from data ingestion to aggregating the data, to building the models on top of it, to sort of testing if the model is doing what it is doing. Fine tuning is not an easy problem at all.
Hmm.
And then once you deploy it, getting some feedback from the user or from the product on how the model is performing, and ultimately detecting drift and so on. So it's all the way from sort of ingestion to observability and security. So it's a pretty broad surface area, and I think most of the action so far here has been on, okay, oh, I can ask this question, but I think to productionalize it, um, for an enterprise, it sort of every part um, of the production process has to be kind of made more robust.
No, no, I think you nailed it. And so we are getting close up on time though. And so I guess a couple questions to round things out. Would love to get your perspective for any future company that's looking for investment right now, whether it be seed or Series A. Like, what's the top 3 tips you would recommend or give them to make them highly investable, in terms of your eyes or any other investor's eyes?
So first of all, I started both my companies in a downturn. First was in 2001. Second one was in 2009, 2010. So it's a great time to do this. I think hiring is easier. Um, the expectations that employees have are less crazy, and people who really want to be in a startup want to do it. So I think it's a great time to start a company. So I'm like, yay, let's do it. Um, Second, I think in times like this, where the budgets are tight and there's a lot of scrutiny from the buyers, you're only going to make progress if you really have a sort of a must-have product versus a nice-to-have product. So I think you don't want to kid yourself. You want to be really, really sort of vigilant about what you're hearing from the market. And if it's not a must-have product, you're going to have a hard time selling, and you're probably going to have a hard time raising money. So I would sort of seriously zoom in on that. And I think the other thing is keep your burn low. I think we're coming out of an environment where the funding was cheap and so on, and the hiring was easy, and those companies are struggling because once you built up that burn, people get into this rationalization mode. Um, so going back to what we talked about, till you kind of have evidence of product market fit and a scalable go to market, keep your burn low. Outside of that, I mean, there's so much opportunity right now. I think it's just a phenomenal time to be doing this.
Yeah. No, I think you nailed it, man. I think it's kind of a fail safe to make sure you actually have a really, really good product and really good to go to market right now. So as an investor, it's got to be a great time too, right? Money's not free anymore. Well, I guess you look at it both sides, but I get what you're saying. So Harpi, we're up on time though. Where can people find you? Where can they find out more about innovation endeavors? And then we'll take it from there.
Yeah, so innovationendeavors.com is our URL, and my email address is harpi at Innovation Endeavors, so HARPI at Innovation Endeavors. And we love to meet people even before they've started thinking about starting a company. So if you're doing anything cool in these areas we talked about, and even if you're not starting a company, we'd love to meet. We put together a number of events for builders, so we'd love to have you be a part of it. So yeah, reach out, and I'm always happy to chat with founders.
Awesome, man. Well, your advice was sage today, so appreciate it. Some fire takes that you have. So thanks for being on the show, man. It was a pleasure.
Ryan, likewise. Awesome. I really enjoyed the conversation.
All right. Well, thank you, sir. And we will see you on the next episode.